Hello, I'm Mark Lowerty. Do you know the difference between trading and investing? Well, in the next 7 minutes or so, we'll tell you all about it as part of Singapore Investment Week, 25th to the 31st of August 2012, Investing for a Secure Future. Our guest once again is Cayden Chang, who's director at Mind Kinesis. So, tell us the overview. What is the difference between a trader and an investor?
Okay, in the overview, there are three key differences. Now, the first key difference is for investors or investing, what we focus on is really the fundamentals of the company. Now, in simple terms, that means how much money is the company making? Is it profitable? So, fundamentals. Now, for trading, mainly the traders look at the price, look at the news, and look at the company as numbers, fluctuating numbers of the share price going up and down.
Yes.
So, this is one of the key differences. Now, let me give you an example. For example, when you look at the price. Now, traders, what we do is every single moment, most of the time we respond to the share price just by looking at the news. So we buy on good news and we sell on bad news. Now, this is for the trading or traders. Now, for investing, it's very different. We don't really look at the price first. So what do you look at if you don't look at price? Now, what we look at is we look at the company itself. How much money are they making? Now, just give you an example. Let's say fast food. Fast food. The first thing that comes to mind is actually McDonald's. Now, if let's say somebody's house, nearby somebody's house, there is a branch, a McDonald's branch, and every single day, on average, every single day, the McDonald's branch sells 500 burgers per day. Now, touch wood, even though in the European crisis, if really a crisis really breaks out and it spreads to US or whatsoever, now that McDonald's is going to sell 500 burgers, no matter what.
Presumably people wouldn't be cutting back on burgers.
Exactly. So even rain or shine, the burgers will still be 500 average. Now, and this one's got nothing to do with the price. Now, the price of McDonald's may drop, but the number of burgers they're selling is still 500. So we need to understand the difference between the value of the company, which is they're still making money, and the price of the company. And one of the quote to really describe the difference between investing and trading is really price is what you pay. Price is what you pay and value is what you get. Yeah, so this one. Now, the second difference is actually the mindset between the investors and the traders. Okay, in investing, what we are focused is never lose money, which is Warren Buffett's investment rule number 1: never lose money. And for trading, most of people gets into the stock market wanting to make tons of money. So, what's the difference between really using this rule, investment rule number 1, never lose money, and then make lots of money? We just give an example. So if let's say each of us we have $100, and we went into the stock market, and we lose $50. Now what we lost in terms of percentage will be 50%. 50%. So we lose 50%. Now, and if let's say right now I've lost $50, and I want to make it back. Now the amount percentage that we need to make it back is in fact 100%.
That's right, because 50 times 2 is 100, isn't it?
Exactly, which is why the initial focus is investment rule number 1: never lose money. But if, let's say, our mindset is to go in to make tons of money, so what is going to happen is this. For example, $100, we lose $50. So what we're going to go in is we're going to bring another $100, we're going to bet. So to get that $50 back and to earn another $50. So imagine if you lose $50, the next thing with the mindset of making tons of money, we're going to bring in another $100. So everything will just double up. Now the only time that we're going to stop is when you lose every penny.
Yes.
Yeah, which is why investment rule number 1 has to be never lose money, so that we protect our hard-earned savings.
And so do you have a call on whether it's better to be an investor or a trader? Because there are lots of traders out there too.
Oh, okay. To me, my perspective, there's no right or wrong. Yeah, it's really what the person wants. Now, for me, my preference is to be an investor rather than to be a trader, because I want to spend most of my time spending time with my family and so on. But in terms of trading, we have to monitor the market very, very often. Yeah. So my own preference will really to be investing. And I would suggest to viewers out there is really to invest and not to speculate. So that's really point number 2. And point number 3, the difference between the investing and speculation is, for investing, we focus on this thing called the margin of safety. Okay? And for the trading, we focus on cutting loss. Now, what's the difference between focusing on the margin of safety and cutting loss? Now, for margin of safety, what we do is before we invest in any stocks, before we use our hard-earned money to invest in anything, what we want is we want to be very, very sure. We want to be on a conservative side. So what we need to do is we need to calculate the intrinsic value of the company, adding in an additional buffer in case there's an error in terms of calculation. And this buffer is called the margin of safety. That means before you buy, you actually add in the buffer. Okay, so that the investors are on the conservative side. Okay, now, so for trading is different. For trading is the moment you, using some theory or whatsoever that they know, the moment they discover the point of entry, they will go in and buy whatever stocks they have. And then from that point onwards, if the stocks go into the direction where it's right opposite of their prediction or speculation, what they do is they practice this thing called cutting loss. Now, cutting loss, it could mean two things. Number one, they are really cutting loss, or another thing is they are realizing their loss. So which is which? Which is why the investors has to be very careful to know the difference between investing, which is to earn a buffer, a margin of safety, and the other one is really cutting loss. Is it really cutting loss, or is it really realizing the loss? So these are the three key differences.
One final point, Cayden,
Sure.
and that is in relation to the time it takes to succeed. A lot of people aren't patient enough to buy a stock and then hold for 6 or 12 months.
Yeah.
They'd much rather be in and out of the market and
Yeah.
have a little bit of fun doing it in the process.
Yeah.
Is there something wrong with that?
I wouldn't say there's something wrong, but it's just that in investing, if you want to make money, it simply takes time. Now, I just give you one quote that's actually given by Warren Buffett. Now, he said something that goes like this. Now, you can't just have a baby in 1 month by making 9 women pregnant. So things just takes time, which includes making money.
All right. Thank you very much,
Okay.
Cayden Chang from Mind Kinesis.